Thailand's done very well in terms of containing the virus, but ultimately we have to look to the structure of the Thai economy. It's simply put, one of the most dependent economies when it comes to tourism. And not only is tourism one of the most impacted sectors this year during COVID-19, but it's also likely going to be the sector that's actually going to take the longest amount of time before it recovers to a normal trend rate of growth. So for example, when we look at the Thai forecast this year, we're expecting growth to contract almost 8.2% year on year. And actually next year, it doesn't really regain much of that lost output. We only see growth at 3.3%. So it's hit badly and it's going to take some time to recover. And that's really what's weighing on the outlook for this economy.
Joseph, does that suggest to you then that the Bank of Thailand's own forecast for the rebound is perhaps too optimistic and that they'll need to take even further action to stem the blow?
Indeed, that is one area where we see a little bit of difference between our forecast and the Bank of Thailand. But by and large, the BOT actually has been quite cautious on the growth outlook for Thailand as well. So, we think in the coming quarters, in the coming months, there will be pressure to do a little bit more, both in terms of monetary and fiscal policy. In terms of monetary policy, we do expect the BOT to deliver one more rate cut, which would effectively bring the policy rate to the lower bound. And then after that leads to new questions on what would be next. And the BOT has actually already suggested that it is studying the implications of a QE program or large-scale asset purchases, such as yield curve control.
Joseph, Rosanna joining the conversation here. And with regard to export from the Thai economy, there's been one commodity that has apparently propped up or cushioned the blow somewhat, and that is gold and the rising prices of gold. How has this affected your forecasts?
So that's always a one-off for Thai exports that we really have to strip out because it doesn't really contribute much to underlying economic activity. So if we were to take out gold, the situation is quite dire when it comes to Thai exports. And actually, when we look at the forecast in the coming quarters, we expect that weakness to persist. From one perspective, it's because if you look at capex intentions from firms in the West, as well as the sharp hit to growth in the US and the Eurozone, we don't think that's been reflected in the export data yet. We also have to look at the industry composure of Thai exports. Thailand's very exposed to the conventional auto sector, which is going to be badly impacted, and it's not really as exposed to semiconductors or biomedical equipment, which are two areas that are doing quite well in some other economies in the region that have a high share of these exports.